Hello and welcome, this is Roy. This time I'm sharing with you a clip taken from a long video, 66 minutes video that I've just finished to record for my subscribers. The clip is focusing on the precious metals. I think you're going to like it. If you like further information about my service, my website, please stay on after the clip ends and I'll talk to you again. Other than that, I wish you have a great week and good trading. Hello and welcome, this is Roy. This past week we have seen most markets staying relatively range bound, but some weakness entering popular market. For example, the precious metals. I see the situation in gold is very dangerous for gold bulls, and anyone who thinks that if we have another $20 or $30 deep in gold, it's an opportunity to buy, I would like to warn you to stay away from this idea, because I see weakness in gold that could send it much lower. Same with silver. So I prepared a long list of charts here, and here's the list. That's the dollar index, the euro US dollar, British pound US dollar, South African rand, US dollar Canadian dollar, Australian dollar, US dollar, New Zealand dollar, US dollar Indian rupee, and then commodities, CRB, high-grade copper, gold, silver, palladium. I'll have a look at the bonds. The euro bond, that is December contract, the euro bond continuous chart, the UST bond, the TYX, and then light crude, Brent crude, gasoline, and then TSX, that's the index of Canada, the Dow Transportation Average, the S&P 500, the EU Stocks 50, the FTSE of the UK, and I'll terminate with look at the grains. Some interesting situation developing there. So I'll have a look at corn continuous chart, corn December 2011, soybeans continuous chart, oats continuous chart, and oats December contract. Okay, this is gold, and what you see here should really frighten the gold bulls. I really mean it. Look what's going on here. This is the weekly scale, the MACD on the weekly scale, something you don't want to mess up with, meaning you don't want to argue. You don't want to argue with a very firm signal that comes on the weekly scale. At the very least, you want to be very cautious. You want to be very cautious, you want to take all the precaution possible and not to go against a signal like that. That is my thinking. That's the way I look at it. Of course, you may disagree. You might think differently, that gold is you might have a different point of view, but I think that right now caution is the watchword here. There are so many things in this chart that say, along with what I've already mentioned in other related markets, that gold is quite possibly coming down not just under 1,600, but might be heading for a big break that would take it maybe to 1,400, who knows, maybe a lot lower. But there is a big break coming in gold. Take a look now at the daily. Now, yeah, there is, of course, I don't think you have seen it, but the price is right now at 1723. The price is right here. You see, but the MACD is telling us that it actually broke under the floor which was here. Do you see that? Right here. This is a lot lower right here. But the MACD says it is weak. It is coming. It is coming. Look at that. It also broke a line here. Do you see the line? But this is the point I'm trying to highlight. Right here. Do you see that? And this is enough, in my opinion, to tell you to be very, very cautious if you are intending to buy the dips in gold. It's not going to work. This chart says it's not going to work. We have here an ABC X ABC, and there are so many options in terms of the wave count. I don't want to go through all of them, but it appears to me that at the very least we are heading for a break towards 1550. Now take a look at the 60 minutes. Very short term. I have no doubt in my mind, what I see here tells me this is going to break 1710. Now, this is 60-minute chart, and of course it could do this, it could hang around here for several hours, but in my opinion this is going to go. And it's not going to go by a touch of $1 or $2. It's going to go. It's going to break by $10, $20, $30. And as I said to you, if you want to jump in, because the gold is down by 30 fell by $30. Gold fell by $30. You think, wow, it's a great buying opportunity. Keep in mind what I've just shown you on the weekly scale. Do what you like, but please don't forget that weekly signal there. Yes, because that tells you, even if you are lucky for the first hour or two, you bought it, it's down $30, you bought it on a dip, you might see a profit of $2 or $3, but you're taking enormous risk for that. Now look at this chart of silver. This is the monthly scale of silver. Also massive break here. Massive break on the monthly MACD. Take a look at the weekly. The weekly is also not as pronounced, but nevertheless, you can see where the weekly is. You can see the weekly clear here, and we're going to see the price itself. You see where the price is? You realize the scale of the divergence? At the very least, silver is heading to 26. At the very least. That's what the MACD is saying on the weekly scale. And who am I to argue with that? And I think that 26 is not going to hold. Take a look at the daily. We got a break under 32. We had a pause, but I think it's heading down. I think it's going to continue. It's going to continue. I've already explained in details yesterday. It shouldn't go. It doesn't have any business going back to 33.50. It didn't really make any headway towards that. Some corrective rally, yes, but nothing much more than that. I think that actually shapes up to be maybe a triangle here. Do you see that? So further oscillation here at around 32.50, sort of quiet market, might be a good opportunity to put position here on the short side with a stop possibly at just above 33.50. If that's too much for you, don't do the trade. I'm not trying to encourage anyone here to take more risk that his account can tolerate. If that's too much, just don't do the trade. If you are happy with this situation and it does anything like that over several hours, that's your entry point and that's your stop right here. Expect a break of 31 and possibly a lot lower. I have a page on Twitter. You are welcome to join. I don't make intensive use of it, but from time to time I do make some comments. I've got 3 articles here that I've written. You may like to take a look. Here's testimonial submitted by an active trader that is using my service. There are more testimonials right here. I have an affiliate program. You are most welcome to join. You don't have to be a subscriber. Links to my videos speaks for itself, but I do have a new YouTube channel that actually covers the recent videos. I haven't had a chance to actually update that, and it also includes a video explaining about a weekend product. So if you are searching for that new YouTube channel, please type EW Practitioner, EW Practitioner in one word when you go on YouTube, and that takes you to the channel and you will see all the videos. RN Elliott, that's a section where you can download a full-scale book. I suggest you do that if you're interested seriously in learning about the wave principle. That is an excellent first step. Private policy, terms of use, these are standard categories. Why join? Read that to see in which ways I think I can help traders at different levels. Subscribe here. That's where you take practical steps to subscribe to my service. I have 3 ways in which you can use my service. You can either take an introductory offer, which is just 1 week. It is a one-off, meaning you can't use it repeatedly. You can use it one time. It's only $9.99. It gives you access for 7 videos. Today's video, plus the chart, plus every single video that I'll record in the coming week, and the charts. And after 1 week, you make up your mind. You want to continue. You use the other, any of the other options. The second option is a weekend product where I allow you to access the weekend videos plus the charts, and that is priced substantially below the normal product, which is really directed at very intensive traders, people who can watch the market every day and can make use, can actually digest all that information that is being churned by the market every single day. And the third product is the full product that costs 79 euro only per month. That gives you access to a lot of information, a lot of setups that are run through every single day, and basically keeps you really in fully informed about the many various markets that I cover. I'm also open to some suggestions. If you come on board on the full product or any other products, please feel free to ask me if there is a specific market that you like me to cover. I can't promise that I'll cover it every day. I'll do my best to cover it from time to time, or at least have a good look at it. That's contact us if you have any problem whatsoever. Get in touch with me. I'm here to help. Tell a friend. Spread the word. By all means, I would appreciate a helping hand. Downloads. That way you can download charts that I put on in the public area. You can see the kind of work that I do. Recommended reading list. Go ahead. They are fairly. It's not as extensive as I would have wished to put here. I just don't have enough time to update it. I have many more books that I would like to put. I need more time to go through that, but there are quite a lot of books here, and also some links to download full-scale books. So go ahead and take a look. Frequently asked questions, that's where you really have to come back to this. If you decided to subscribe, that will help you to find where to find past videos, past charts, etc. Useful links, speaks for itself, and that's about it. So I hope to hear from you, hope to see you on my website, exploring a bit what's going on, and get in touch with me. The slightest question you have, whatever crosses your mind, I'll be glad to help. Wishing you successful trading. Have a great week. Bye now.